The third quarter of 2010 was not stellar. If anything, it just maintained itself and was perhaps about average of what we've seen so far this year. There are no new shovel-ready projects to be started. There are not backlogs of land development plans in the townships having trouble being reviewed because of the number of plans being submitted. That is just not the case. However, considering the current status of the economy, the fact that we have been able to maintain ground and slightly improve our position should be very satisfying to all of us in the real estate industry. The fact that we're still here in the third quarter of 2010 after having survived 2009 with no commercial bubble currently in sight speaks well of what we've been able to do in our market as far as trying to pursue active real estate. The office market has not changed substantially since the second quarter. Deals are getting done and there is a slightly higher volume than in the second quarter. However, these changes are not noticeable to the general public because of the continued large amount of vacancy. Concessions still play a major part in the office market. For example, free rent is still being given inside the term of a 5, 7, or 10-year lease. I have seen some deals in A buildings with effective rates as low as $16 a square foot plus janitorial. I have also seen this higher, up to $20 per square foot in certain circumstances. The B space market, all-inclusive except in-suite janitorial, is somewhere between $13.50 and $15.50 a square foot. Overall, throughout the area, the vacancy rate for A space is about 8 to 9%, while the vacancy rate for B office space is about 11 to 13%. Absorption is minimal since combined between the east and west shores and the downtown, we have 700,000 square feet of available A office and 1.5 million square feet of B office space. There are no obvious build-to-suits at this time. However, if tenants do start to move through the market, there are some projects that are shovel-ready. Large office buildings, over 7,000 square feet, are not selling well in this market. When they do sell, it is at a 10 to 20% discount of 2007 prices. Small office buildings, 7,000 square feet and less, have maintained their value and are selling when available and at reasonably good locations at about $100 per square foot. Although there are some DGS and GSA deals going through the market, again, they are not in the volume that they had been in years prior to the recession. The industrial submarket of 100,000 square feet and larger is starting to pick up. The rates are still depressed, though, to the $250 to $275 range. However, the expectation is that by 2011, they will start moving into the high $3 range. The activity below 100,000 square feet has been fair and continues in that mode. Overall, there are still more proposals being put on the table than deals being signed. The vacancy for the Class A industrial space remains at approximately 11%. The activity, although slow, continues, and there is more talk about build-to-suits, which is a new conversation to our market. The flex space submarket has not changed its position from the first or second quarters. Deals are still occurring, but at a slow and steady pace. In existing construction, the vacancy rates are somewhere between 10 to 15%, while new construction, still in shell condition, may be as high as 40%. Second-generation space is leasing in the $550 to $650 range unless extensive tenant improvements are necessary. First-generation space has stabilized between $8 to $11 for the office component and $6 to $7 for the warehouse component. Absorption is occurring but at a very slow pace, less than 40,000 square feet annually. Nothing that would be discernible to anybody who is not in the brokerage or development business. As was the case for this entire year so far, land is still the slowest moving submarket. The financing remains difficult and many developers and users have opted to purchase existing real estate rather than build new. In today's environment, that can generally be done for less money and in a lot less time. If there's a more active segment to this market, it would be the convenience stores and the banks that continue to look for signalized corners and better deals than they were able to find in the past. There are a fair number of sellers in the market, even at discounted prices. but it is finding the buyers that is proving to be the most difficult. Some of these land parcels will end up going back to the lending institutions, and as that happens, the price gets discounted even more. We'll see more of this, but I don't expect this to happen until sometime in the second or third quarter of 2011. In the few land development deals in which I am now involved, the prices are all discounted 10 to 20% of the 2007 prices. Multifamily development is starting up again, as those developers look for deals. The apartment market is paying between $6,000 to $7,000 per unit for raw, unapproved land with a reasonable density of 16 to 18 units per acre. Townhouse development land, 8 units per acre, is selling for $40,000 to $60,000 per acre, unapproved, when the land can be found and has a motivated seller. The commercial and retail submarket has stabilized. It took a heavy hit in 2009 and slowly made some progress by the end of the second quarter this year. Again, there is not much new that has occurred. The vacancy is about 25% in the small neighborhood centers, while in the larger power centers it is probably closer to 15% only. Rates in the former are between $10 to $14 a square foot, while in the latter they range from the asking rates of between $30 to $35 a square foot. Actual deals are happening and some absorption is occurring annually, but around $25 a square foot, but at a pace that is not noticeable to someone who is not in the business. Looking back as we move into the fourth quarter, we made some progress in the third quarter, albeit slow, but definitely forward progress. I expect the fourth quarter will be more of the same. I don't see a real improvement coming until the third or fourth quarter of 2011. And now we are looking forward to the next 90 days.